Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome all of you here on this Monday, day before the election day. Okay? Some of you might be nervous out there. Anyway, a little fun with you there, but just don't worry. It's only another day left. So we can make it together, can't we? Okay, everyone gather around and say we can make it. All right, here we go. Now we also have Barbara Armstrong in chat. We welcome her. And a little fun. We got to give Barb a hard time. Okay, it can't be easy on Barb, so give her a hard time. Now, just real quick, remember last week we talked about IV or intrinsic value. Excuse me, not intrinsic value, the implied volatility with technicals. That's what we talked about last week. Today we will follow up on that. Okay, we'll talk about those traits from last week and are there any existing positions from last week that we still have now. We'll also talk about here today, looking at some earnings that are a little bit farther out in time. We're going to talk about volume, stock and option volume, and with that, channels. Okay, got to throw that in there. So going to kind of have some little buffet of some indicators we're going to talk about. But we will bring up volume here today. Yes. Okay. Now, real quick, as we get started, remember this information is provided for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk, not suitable for all investors. Also, when we talk about examples, we will be using the Paper Money software application. And remember that investing involves risk, including loss of principal. Now, we kind of talked about what we wanted to bring up. What I want to do first, okay, is I want to bring up the trades really coming from last week, okay? So let me bring this up just real quick first. So last week, and I want to kind of just show you this, and I want to kind of answer something right off the bat just briefly, okay? So last week, you'll know that we talked about, we always try to talk about something that's relevant, okay? So we've spent some time, and you'll notice these are the column headings that you'll find on my X page, okay? And what we did is we spent some time talking about that column, okay? Now, over the weekend, I asked, hey, what are some of the topics you want to discuss? What questions do you have? And someone wrote, and I don't take it as negative, okay? But they said, hey, why do you bounce around from maybe focusing on one column and the next class you don't talk about maybe a section of the other columns at all? Well, it's because really we're trying to kind of focus on one of those columns, get an understanding of really how it works and also what trades might be considered, okay? And that way, if you saw, like when I've talked about relative strength, or I've talked about Cahold, we've talked about breakouts. If you see those individual classes where we kind of dive bombed on those column headings, well, if you bring it together, you would know how to do pretty much any of them, okay? So it's not that I'm trying to, let's say that relative strength is not important if I talk about IV plus technicals. It's just we try to focus on one or two, because most people say if I talk about more than one or two things, my mind, is I'm just overwhelmed. Okay, well, we've heard that before, right? Or I drank from a fire hose today. I mean, those are the common comments. Okay, so it's don't take it as if I talk about IV plus technicals like I did last week. Do not take it as that these other things are not important. Okay, so last week we just dive bombed on this. We talked about what trade examples might be done from that and how. Okay, so hopefully that gives a little bit more clarity. We'll come back to it in just a sec. So first off, last week, and by the way, this is very important. Barb and I, we really like to, Barb, she was a client. And first off, my brother worked at the company. And my brother invited me to see a workshop, just like Barb did. So I was never a client, but I definitely was a user of the product, okay? So we kind of come from the same background of maybe from Missouri, the show me state. Like really interesting material, but show me. Well, show me is really actually done through paper trading and, hey, let's test the strategies. And might maybe a shoe fit of a certain strategy that the investor might like for themselves. So last week we did some trade examples. We did Apple, we did Ford, okay, Google, and you're going to see that these right here, I'm just going to put an X on the ones. These were all of the ones that we did that were really earnings trades, okay? So the X, all those X, those are all earnings trades. Now, of those trades, the only two that are really left are Ford, which is no change from last Thursday, no change. And the only trade that we really have left are Ford and Apple. Okay, so we'll talk about Apple in a little bit. But those are the only two trades we had left. Let me kind of just give you a quick update. So when we look at Google, Google had a $334 premium, expired worthless. When you take a look at Amazon, oh, by the way, what's the whole point of learning about trading with technical indicators? It's to not necessarily be a technical specialist. It's to be a technical specialist that applies in practice what they're learning to see if it could work over time. Not that all will, okay? Now, if you take a look at, let's say, this one, Amazon, expired worthless, $317 to the good. If you look at CMG, a little discussion there. It would have closed below the strike of 59, okay? So you're going to see that it sold the 59 right here, and the stock closed at 58.59. Break even was 57.60, would have not received the maximum gain, but would have been about $100 to the good above break even at expiration. So that one could have been assigned. In paper money, they don't get assigned. Or the investor might say, hey, I got assigned, and they have the option now to consider, do I want to sell it or hold it? That's up to them. But it would have been about $100 to the good, approximately. Now, the other one, just real quick, when we look at, let's say, Starbucks. Starbucks closed above the strike, $174 to the good. And if we look at Goldie Sachs, $190 credit there. That expired worthless as well. And then Meta, let's just double check this. Yeah, correct. That expired worthless. So it's kind of interesting that there's only two trades left, and it's these two. Now, by the way, if we kind of added those up and kind of said, what's the grand total so far? Now, remember, everything's not closed yet, okay? Of the ones that closed, like open close, $1,285. But we have some open positions, two of these, which we'll take a look at now, okay? Now, the ones that we have, you're going to see that we really have a cash secured put on Apple, okay? Sold it for $415. It's at $942. Now, we know what this means. It means that the stock most likely has gone down because the option went up after it was sold. Now, you got to remember this is where proper position sizing becomes key. Because if the stock were going to be assigned, meaning someone sells the shares to this portfolio at the strike price of $230, does the portfolio have money to buy the shares? And that's the plan. If it gets assigned, it gets assigned. If it gets the shares, it gets the shares. And so this needs to kind of be thought through that, hey, is that a stock that you might consider in owning? If that is maybe something you might say, yeah, I would, then the investor might say cash secured puts or short put verticals might make sense. But it's underwater right now. And if you look at, let's say, Ford, which we talked about twice last week, which I'm not going to heavily talk about, there's no real material change on that. Sold the $11 strike with a 47-cent trade price. We have a break even at 10.53. And so if you look at this, we're 16 cents-ish away from break even. It ain't break even today. That's break even in 11 days. Okay? So those two are on the table. So if we kind of said with the close and with the current positions, where are they? Well, if we looked at it all right now, just kind of added it all up, pre-commission, $866. The net right now is $419 on the positions. Okay, we look at the batch of positions, not one or two. Okay, $419 where it stands right now, pre-commission. If these could come back up a little bit, yeah, we're going to find out. But we only have two trades left. Okay, now are there any questions with this? Now, comment. Isaiah says, can early assignment happen on a vertical spread? If you sell a call, you sell a put, okay? And if we're talking about U.S. listed equities, the answer is yes, okay? So we're not talking about indexes, okay? We're not talking about like the S&P 100 or anything like that. The products that we're trading can be assigned prior to the expiration, regardless of the in-the-money amount. We have the obligation, someone else has the right. And what is it their right to do? Well, it's their right to sell us the shares, or they have a right to buy the shares. So if we sell a call, we have an obligation to give the shares up at the strike price. If we sell a put, we have an obligation to buy the stock at the strike price. The person that has a right, the buyer, has the opposite. Okay? So we're going to keep an eye on these. But last week, what we want to do is, I'm going to use the word napalm. Okay? Remember I said a lot of times people do too few examples. Like if I ever did a class where I, for example, said, hey, let's do one trade example, it's just too little. You don't learn like that. You don't learn fast. And the one thing is, if you watch, these classes, I want you to understand is, I don't want you to be someone that in 20 years says, I finally now understand it, but now I'm 80 years old. Fair? I want you to learn as fast as possible, find something you're comfortable with and that you like, and then expose that as soon as possible. Okay? Now, let's look at something that came up. Okay? So we spent the first 10 minutes kind of talking about the past trades, gave an update. I teach Tuesday, I'll teach Wednesday, I'll teach Thursday. We'll watch these and see where they are, but we only have 11 days left. Okay? Now, I want to talk about just real quick an interesting news announcement that came out, and many of you said it already in the chat, which is NVIDIA. Now, NVIDIA is taking the place of Intel. I kind of find this interesting, okay? Do you realize that the Dow Jones Industrial, when you go back and look at this over like 3 years, 20 years, whatever it is, do you realize that the Dow is not the same stocks over years and years and years? Not all of them. They're replaced. And sometimes if certain stocks don't meet the criteria, okay, they can be changed by maybe companies that might just be doing a little better and meeting the criteria to be on the index. So it's like a survivorship bias. The companies that are losing, technically, if you want to call it that, they get dropped out. They're not a part of the index. So when people kind of say, I can't believe, how does the index keep going up? Well, they keep trying to put maybe the winners in there that are going up to maybe hold up that trend, et cetera, et cetera, et cetera. So it's just kind of interesting, okay? So it's not the same companies back in 1950, okay? Let's just be honest. Now, I want to talk about, sometimes we talk about volume, but I want to talk about stock volume, and I want to talk about, let's say, option volume. Now, sometimes it's pretty apparent, as you're going to see, okay? So NVIDIA going to be listed on the Dow Jones 30. Now, if we brought up volume, what I'm going to do is I'm just going to bring up volume. And if I bring up that volume average, pull that up, you're now going to see that this is just looking at the volume average over 50 days. If you don't mind, I'm just going to change that right there, click the gear, and I'm going to move this back, go 21, click OK. And that's all I did is I just said, hey, I just want to see the month's average, okay? 21 trading days being about a month calendar-wise, okay? Trading days, not calendar days, okay? Apply, click on OK. Now, if we looked at this right now, we would have to say that when you look at NVIDIA, so this yellow line, that's the average volume. The average volume really for NVIDIA has been declining. Now, what you're going to notice is if we looked at these volume bars, you're going to see that the volume, now this is the volume so far, okay? Now, we know in the world that Friday, we had a day where it was almost at the average, okay? Now, if you kind of said to us and say, if you were really looking at maybe some kind of activity, do you look at stock activity or do you look at option activity? For this example, we're going to use option activity. Now, if you kind of asked us and said, okay, I'm going to twist your arm one way or the other, do you look at stock volume or do you look at option volume? We would say we look at option volume, okay? Now, what we're going to do is going to go to the trade tab. Now, remember, we're going to use this as an indicator, and it's an indicator of what? I want you to be thinking about that, okay? Now, if we pull this up, what you're now going to see is I have NVIDIA here, okay? And I'm just going to close these for just a moment, and I'm going to only look at, let's say, I'm only going to look at 4 strikes, okay? So first off, on NVIDIA, if I pull up the 8 November, and the columns I have daily, this is not daily, delta, volume, open interest, okay? Now, what we want to do is kind of look and see, are there investors or traders that are trading maybe off this news? Now, that trading could be buying or selling options, okay? Now, for some of you who said, I don't really know what this really means, when we look at open interest, that's the number of contracts that are open and still unexercised. When we look at volume, that's the contracts bought or sold today. They're not netted off, they're cumulative, okay? So if someone buys 100 and then someone sells 100, that doesn't mean zero, that's 200. So the higher the volume, the more activity. Okay, now, so why do we care? Well, when we look at volume and you look at open interest, if you see maybe a high percentage of the open interest, that's kind of interesting, okay? If in this case you see, James, we're at a multiple of the open interest, it's even more like apparent, okay, of activity. So we have 37,000 so far, it's not even over yet, and the open interest is 8,700. We have almost like a 4.5 multiple of the open interest. So someone might be buying and or selling these calls, okay? Now, who really knows if someone's buying or selling? The broker does, who has those accounts, okay? We cannot see our people opening or closing positions. We can't see what their positions are, okay? So we're kind of speculating, which is not a bad word. You're kind of saying, hey, is there some activity here? By the way, can that pump up volatility? That's the idea. That's the tag on from last week. So what you're going to notice is we have a high percentage of the open interest on the 134, about 75%. We have 100% of the open interest on the 135. We got about 70, 80% on the 136. You got about 4 or 5 multiple on the 137. You got like a 7 multiple actually on the 138, and just so on, okay? Now, it's not just the call side. It's on the put side too. Now, could these investors be buying puts on NVIDIA? Could they? They could. Okay, kind of make you wonder maybe, that'd be interesting, but they could. Now, you're kind of wondering, same on the put side, is it just on a strike or multiple strikes? Well, if we get on multiple strikes, you're going to see that one is open interest, volume, about 3 times, about twice, over twice. This one right there, almost triple. This one right here, 4 times. Okay? And this one right here, a double. Now, the also kind of thing is it just in this week's expiration, or is it maybe in next week's expiration as well? Well, let's open up and find out. Okay? Now, by the way, where do you get this information? Well, a lot of times so I look at X. Pretty much, I'd say 95% of all the news I look at really comes off X. Okay? And there's a lot of great information you can get on X because you can choose who you follow. Okay? So the biggest actually thing is this came out on Friday afternoon, and just getting those updates on X helpful. Okay? Now, the biggest thing is when we look down here, there's also a high volume relative to open interest. It's on the call side and it's on the put side. Okay? If we kind of say where's the most activity, it's in this Friday's expiration. Now, here's how it works. If portfolio managers are supposed to have maybe certain stocks or exposure to the Dow, some portfolio managers might be mandated to have some of the Dow components. So if one is delisted and one is added on, it might create potentially in the short term some short-term interest in the new one that's being added. Does that guarantee it's going to go up? Absolutely not. But there might be some interest. And we're seeing that on the options. Okay? Now, what we're going to do is we're going to do an example of selling. Okay? We're going to sell the 136 put. And we're also going to sell, going to next Friday, the 135. We're going to do one contract each. When you look at the implied volatility, 56 and 53. Now, let me kind of go back to part 2 of a question that I got, okay? Now, you guys know, this is by the way, if you pulled up my X page, you'll see this kind of view right on my X page, okay? X, if you don't know, we're talking about Twitter, okay? Now, what I want to kind of show you is when we do examples, whether we talk about a bullish bounce, whether we talk about a flag, bull flag, we talk about a breakout, we talk about a moving average crossover. Last week, we talked about IB plus technicals, where we're looking for 3 green arrows of the moving average, MACD, and stochastics. You're going to see that a large majority of the time, maybe 80 to 90% of the time, when we do trades, bullish trades, the RS 5 and 10, RS stands for relative strength, they tend to be in at least a light green to a green color. Okay? Now, sometimes it might not be on the 21, the 42, and the 63. That maybe, if we did the example of Cisco, hey, Exxon, you're picking one where the relative strength stinks and you're deviating away from looking for strength. No, that's not true. If you're seeing red to gray to green, that is a rotation of strength or stronger relative strength compared to the S&P 500. Okay? So someone kind of said that, hey, your examples, a lot of them, or some of them, they're red. If they are red, which I think on a majority basis, probably 80% that's not true, I would really say that if they were red, it's because they were red in the 21, 42, 63. But if you're getting a bounce, okay, a bounce, hold, a breakout, crossover, whatever, if you pull up those positions and said, what's the color on the RS5 or 10, the 1 to 2 week period, highly likely that those are green. Now, what are these right here? Well, these are the trades we're going to look at. To prove my point, when we pull up examples, sometimes you kind of see a little green. Now, this doesn't mean it's guaranteed to go up. That's just saying where it is right now. All right. Now, let's go to NVIDIA just real quick. Just trying to answer questions along the way, because I wouldn't ask you a question if I didn't want to know the answer. You gave me the feedback, and I'm just trying to answer the question back. So first thing we're going to do is let's go ahead and show the example of selling the 136. Now, what do we need to be careful about if we sell the 136? If you sell the 136, the risk is all the way down to 0. So if the investor says, I don't want the risk all the way down to 0, well, one thing we might consider is maybe buying a put just to the downside that maybe has a delta of 10 or less. Bad part about that, you got to pay for it. The other bad part about that is there's a commission. Now, that might be offset by maybe what you think the positives are. You evaluate for yourself, okay? So if we look at the net credit of this, now you could think of this is more standard vertical-ish, maybe, fine, okay? But you're going to see the net credit there is $2. If we sell the 136, okay, and we collect $2, break even, keyword, at expiration is 134. Now, you got to think this through. What does this mean if we sell the put? You could be the buyer of the shares at the strike price from now to expiration, not just at expiration. Okay? Now, the goal of this is to grab 50% in the first 10 days, but remember, we ain't even got 10 days. 65% with 20 days left, they ain't 20 days left. This is we're trying to get 80% of that number or more, or potential assignment where we're going to be the buyer of the shares at the strike price. Okay? Now, in this example, we are okay with letting it go to expiration. If it's a sign and we buy the shares at 136, we now own the shares, we can evaluate support, set a stop, and see if the stock goes up. If it doesn't, the investor might set a stop and have an exit point. Now, we're going to go confirm send. Note that extra commission. Note the buying power reduction because we're buying the put. And that buying the put is quite helpful because it's not tying up as much capital. Now, quickly on the next one so we can see a little variation. Now, this is what's kind of funny, okay? As a teacher, I try to show you variations so you can kind of see pros and cons, okay? But sometimes when I show variation, someone sometimes thinks that what I taught before, it doesn't matter. No, there's pros and cons, okay? So I'm going to go sell vertical, okay? And we know if we sold the one that, let's say, was this Friday expiration, the volatility should be higher, okay? If we sell next week, the time decay is not going to be as much. The premium of this one should be higher because there's more time. Okay? Hence pros and cons. Now, what I'm going to do is I'm going to come down to about, let's say, the 120 or so. Okay? Now, remember, there's not just one strike that can do it on the downside put option. There's a couple of them. Anything with a delta 10 or less in our example. Why 10 or less? Because we don't want to pay that much for it. The more we pay for the put, the less net credit we get. Okay? So there is, and also a delta 10 or less, we're trying to get something where it still has liquidity as well. Do we ever think that that is really going to become worth anything? If it does, it means that overall position that you had is losing most likely or highly likely. Okay? So we're selling, second kind of example of NVIDIA, selling the 134, buying the 120. How many of you saw the news of NVIDIA? Okay? And how many of you have been watching the volume on NVIDIA today? How many of you saw that? Deegan actually says time decay. Okay? Yeah, decay. So you got to understand, I talked to some people in like London and different parts of the country. And, some people talk about time decay, volatility, and beta. And it's just, we all have different accents. And I love accents. Okay. I lived in Austria, Germany, New York, Kentucky, Nebraska, Utah. And I just love the accents. I just love it. Okay. Now, note the extra commission. There's the buying power, what needs to be set aside. And we're going to say send the order. Now, I want to go back to something just real quick, because one of the things we talked about is we were trying to maybe look for some examples that maybe some of you said, James, I don't like to do earnings that are that close. I mean, in your examples from last week, I mean, you did a lot of trade examples and you might not like that. So remember, as a teacher, I can't just speak to one thing because not everyone does maybe what you might do or what I like to show. So let me show a little variation, or maybe that earnings might be a little farther out. Let's look at two examples, okay? Now, one of the things I want to talk about here is I'm going to bring up ADSK. And when you look at ADSK, what you're going to really notice in this case is, okay? And by the way, let's bring it all together, okay? So when I say bring it all together, I'm not just going to talk about a column heading or two. Let's bring it all together. Because I'd hate for someone to walk away and say that I'm just looking at one thing and the other things are relevant. No, let's show it. You just got to remember, from my side, if I see that I just drank from the fire hose, that's why I try to just speak to one or two things. Okay, I think we're on the same page now. Now, I'm going to look at Autodesk. Let's kind of highlight this line let me just kind of point to it. Okay, so Autodesk, okay? So one of the things we actually see is it is in trend 3. Well, who cares? Well, trend 3 is just the stock above both moving averages. Don't know if that trend can continue. That's the idea, right? Now, if we look at that's the daily. The weekly chart, it is also in trend 3. Now, what I've learned about short-term trading is if you're going to trade short-term, it's always nice to have, or at least on a majority basis, really where the daily and the weekly trends are to your back, meaning that they're showing green as well, okay? So if you like to trade intraday or on a 1 or 2 day basis, you might say, I'm going to try to take a bullish trade based on what I'm seeing on the daily and the weekly charts as well. You're taking a short-term entry in those trends, okay? You're thinking those longer-term trends could help, okay, that short-term trade. Now, when we look at, let's say, Autodesk, what does the gray color mean? Oh, no, this is bad. You're deviating away from what we talked about last week. Are we? Do we know what gray means? We're about ready to find out, okay? So hold that thought. I want to see, what does gray mean? What does the number 44 in the box mean? What's that number 44 mean? And what's the gray box for? Okay? Now, when we look at the relative strength, the 100, 100, 100, the relative strength is compared to the S&P 500. And that's a historical measure. It's not a forecasting tool. It's just saying, hey, in the last 5 days, it's been outperforming the S&P in the last 5 days, last 10, last 21, last 42, last 63. What it's saying. We're just wondering, could that trend continue? Now, when we look at this and we say, do we have a bounce? Not yet. Do we have maybe a breakout? Not yet. When we look over here to the right-hand side and we say, hey, green with 1 day, what is that telling us? What does the 1 tell us? Remember, I've been breaking down each column. What does it tell us? Well, 1 with the green background just tells us we want to confirm script's not guaranteed for accuracy. It's going to tell us that moving average on the 10-day whole moving average has been up for a day. What does the red background mean? The moving average of the whole moving average is red, and the 8 color tells us it's been down for 8 days. The 20-period moving average is not turned up yet. If it had and gone green, it would be with a green background with a 1. It's not there yet. But the green background with a 1 just means, hey, this might be early. Okay? Now, that's not bad. Just like a baseball hitter, you kind of want to not have the bat down around your ankles and then try to swing. You're trying to see, hey, the pitcher is getting ready to throw. So if you, for example, start to see 1, 1, 2, those are examples you might look closer, because if all of a sudden the 20-period moving average, which is lagging, okay, if they start to go green as well, you're seeing more confirmation. All right. Now, let's go to the gray and see what it means. 44, 45 in this case now is telling us the IV percent. And when we right-click on that and say Edit Formula, what you're now going to see is, what does gray mean? It's in the middle. Now, what is in the middle? Well, it's the number of days where we've had 1 to 2 days of price above moving average, MACD, and stochastics. What is light green? It's 1 to 3 days of price above moving average, MACD. So what do you really want to see? You probably say, James, I want to see us go from gray to green. But if it's at least gray, you know it's early. Now, how could we have known that was early? By what we just talked about. Okay? That 10-day whole moving average saying 1, 1, 2, we know it's early. Okay? Now, by the way, what you're going to notice is when we see 1, 1, 2, we're going to go over to the IV plus technicals, gray, 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 etc. The ones, if we start, let's see, 6, green, okay? Look at the one that says 2 there, light green, and so on, okay? So if we start getting 4, 5, 6 days where that moving average is green, you're probably going to get that light. You should be having that light green to dark color green, showing that the price, okay, the price, the moving average, MACD and stochastics, that they're above, okay? And notice what it says right there, days above, okay, the moving average. MACD is up, stochastics is up, etc. So trade number 2 that we're going to look at here is we're going to go to the example of Autodesk, okay? Now, if I were to ask you, what does Autodesk look like to you? Now, by the way, the point we want to bring out here is that not everyone likes to trade the same, okay? Now, if we go back to, let's say, earnings on this, earnings is on the 26th, okay? So it's on the 26th. So remember, we've said for years that sometimes investors, they can see when the earnings is. If they think the earnings is going to be pretty good, they might try to buy potentially, maybe, 3 to 4 weeks prior to the earnings because they can see when the earnings are, okay? Now, some people have the fallacy, I'll buy like the hour before it's going to announce. The problem is a lot of the expectation is already built in, okay? So you're trying to see, are there some stocks where they're maybe just now starting to break resistance? Now, if you take a look at this, we do also have what Barb would call a bull fleet. Right, Barb? Okay. Now, if you take a look at this, what you're going to notice is a little run to the outside, a little pullback, pokey above the line of resistance. Now, what is that green dot on the chart? Well, the green dot on the chart is showing what we call close above the high of the low day. And if we take a look at the lowest red candle, which was Thursday, we're trying to close above that. Okay. Now, if you use a green candle for your low day, we're not there yet. We look at the red day. Okay. Now, what we're going to do is we're going to right click on this chart. Now, for you who said, I don't even trade options, don't worry. We're going to do a stock trade just for you. And what I'm going to do on the Autodesk is I'm going to pull that up. Okay. And we're going to right click on the chart. Since we're doing a stock trade, buy custom, we're going to go with OCO bracket. Now, for some of you bull flag investors, what might be the potential target on this example? And if you don't mind, I'm just going to kind of take off some of the things at the bottom so we can get a little bit more room up top. Okay. So I'm going to pull up let me reload it. Just trying to get an idea of where that might be. Okay. So there it is. Okay. Now, the reason I delete on the bottom is I want to kind of see the right-hand side. Okay. So if we kind of looked at this and said, what are we kind of seeing? What do we got? Maybe 267. Maybe if we kind of looked at the top here, 293-ish. Okay. Now, so if we looked at Autodesk, we'd have to say, geez, maybe could it do? Maybe could it try to run again? Now, we don't know if it's going to. When you're an investor, you could think that everything looks wonderful. The reality is nobody knows the future. Okay. So it's probability based. The probabilities change with time. The probabilities can change with volatility, etc. You're just trying to pick good companies that have a trend, not just technically, but also something fundamentally as well. And also that might have a decent expectation of positive earnings. And we're just trying to have some tailwinds, if you could say, to make that potentially go higher. Now, could the industry group help you? Sure. Could the sector help you? Sure. Could the industry group, could the index help you as well? Sure. Could they also not help you if they all fell down? Yeah, you could get drugged down. This stock does not trade by itself. It's in an industry group. It's in a sector. It's in an index. Okay. So it's affected by what happens in the space and in the index. So we got that up. We're going to put a target. Where would we put the target? Now, Cola actually says 295. Okay. Cola changes the mind. It says 294.51. Okay. So Cola, let's say now you're only using that prior high. That stands the greatest chance, probability wise. Maybe it could happen. Okay. We could go to the probability of touching in different expirations to see what that is. But wonder if the investor said, look, I want a little bit more. Okay. Now we're going to use a little Fibonacci here. Okay. So what you're now going to see is if we take a look at this, where did this move start? Where are we? And where might it try to go to? Now, what I'm going to do is if we looked at a 161 extension, that's going to be 308. Now we know if we set a target at the higher price level, there's a less probability to hit it, especially in the short term. So what I'm going to do is I'm going to right click on that line, edit properties. Okay. Now there's kind of some comments sometimes where people will say you cannot go broke taking profits. The problem is if you take, profits a little early on a majority basis, you better have more wins than losses by a lot. And you better make sure that when you have a loss, it's not outside what you can be willing to take in terms of a loss. That's not a true statement. You got to add a little bit more to it. What we're going to do is I right-clicked on the line and I said, hey, what's a midpoint between the breakout area and the 161? Because the 294 doesn't give maybe a chunk of meat there. Maybe the investor says that's like chicken wings. It's just not enough meat. I'm not even going to chew. Okay. Some of you like barbecue know what I'm talking about. You might be thinking, James, if I'm going to get in, I want to try to have a higher potential target to make it a higher reward to risk. Now, reward to risk is just a forecast. It's not actual. Okay. Now, if what I'm going to do is I'm going to put that target right at 300. So, Cola, you said 294. We're going to go a little higher. Okay, 300. Now, what we're going to do is we're going to set a stop right underneath this area right here, the 61 fib, which is at 283. 56. Okay. Now, if we took a look at this and said, okay, if we set a stop 2% below that, it'd be 277.88. Okay. Now, in the two trades that we did so far, notice what was the relative strength on both of them. What was the timing on both of them, right? You'd say that they're kind of similar, right? Which is not unusual. Now, remember, the common denominator in any trade that we talk about. Can anyone tell me what the common denominator is? What is the common denominator? Not 10 things. There's only one common denominator. What is it? Tell me what it is. Okay? Now, if I don't get it, I'm just going to close the class early and say, let's try again next week. Okay, here we go. Now, what I'm going to do is, let's say the investor said, James, I could invest, or I'm willing to invest $10,000. It's going to be about 34 shares of stock. Okay? We're going to go dated GTC. Now, so the second trade example, Autodesk, we're going to click that right there. No, we got a target, we got a stop. Read the lines in red, confirm. No, what does that stop mean? That doesn't mean that's where it's going to fill if it gets out. Okay? That's a trigger to sell it. We don't know where it's going to fill. Okay? Send the order. Now, I'll fix that. Paid Money Account does that for me sometimes. Now, the other one I want to kind of make mention of is I want to also go back to, since we have the announcement tomorrow, potentially, it's the election day, maybe might we have the announcement. One of the examples that I want to look at, I'm just going to kind of make mention to say, hey, we're going to keep an eye on this. You know, you'd probably say one party is a little bit more pro-U.S. automakers, perhaps. Okay. I want us to keep an eye on GM. We already have Ford right now, but if we're trying to make, let's say, U.S. autos more in favor, or less international manufacturers coming in selling for as cheap, keep an eye on Ford, keep an eye on GM. Okay, just keep an eye there. Now, the other one I want us to kind of keep an eye on is also, let's say, when we talk about channels, right? Now, when we take a look at this, now we know that kind of one party wants to drill, baby, drill. I mean, some might say, well, kind of would like that because I like cheaper gas, potentially, okay? So one of the stocks that we're going to do here just real quick, and we're going to fast fire kind of two of these. We're going to go buy custom. We're going to go with OCO bracket. This is a post earnings trade. And what you're going to notice is it's eclipsed inside this old support and maybe trying to get back up to maybe that top end of the channel. Now, you know, in our classes, the word channel occasionally comes up. Okay. Now, when I ask the question, okay, what is the common denominator in all of our trades? This hurts my feeling. You might see James literally cry right on YouTube and then it goes viral. Okay. The common denominator of all the trade examples is the stock is above the 10-day moving average or the whole. That is the common denominator. Okay. Now, if we said, well, where's the 10-day hole right here? Well, the 10-day hole is right there. Now, if you said, well, prove it to me that it's actually above the exponential 10-day moving average, now you got to remember something. The 10-day hole is going to be closer to the current price. It's weighted. Okay. So if I just looked at, for example, a 10-day exponential, it should be lower. Typically is going to be lower than the whole. Okay. And whether I use the exponential, okay, which is the blue line, or I use the 10-day hole, which is right there, what you're now going to notice is it's above both. Let me go back to Autodesk. Let's just kind of verify. Okay. Don't want to be kind of saying one thing and it's something different. You go and someone thinks it's different. You go back to this and say, is it above the 10 exponential or whole? Yes. If we go back to, let's say, NVIDIA, is it above the 10-day exponential or whole? What we would have to say is we said this was early, okay? If you look at NVIDIA, it is above the 10-day whole, the blue line, and the 10-day exponential it is, and the 10-day whole it is as well, okay? Now, when we go back and look at this Chevron to close here, what we're going to do is we're going to right-click on the chart, buy custom, OCO bracket. Now, what we're going to do is we're going to put that target right at 161. Now, last thing I want to kind of say here is that if one party gets in, which we don't know who that party is, and it could be one party or the other, okay, drill, baby, drill might not necessarily mean the prices maybe that hurts company earnings. They just might, let's say, try to capture or produce more oil that we consume for the U.S. people. I mean, imagine if that would be the case, and maybe not import as much. I mean, kind of seems potentially logical, but not everything is logical, okay? Now, what I'm going to do is I'm going to set the stop underneath here at 152, and that 152 less 2%, 148.96. Now, in closing, we would have to say that the market has been quite resilient in terms of not being more volatile than it has been, okay? And so what we'll do in our last trade, the third trade example, we're going to buy Chevron, maybe thinking, might that try to go to the top of the channel? Now, your homework assignment, I want you to think about it in terms of how you like to trade around earnings. Do you like to trade direction? Do you like to trade volatility and time? Or do you like to pick stocks that have earnings coming up maybe in the next 3 to 4 weeks? The point of the content is to throw it out there and say, what might you consider for yourself? Like we did last week, we'll follow through on these trades over the next couple days as well. Now, we got Michael Fairborn coming up next with cover calls and short puts. I want to thank Barbara for answering those questions in chat, and she will be teaching later on ETFs here today. Now, I want to wish you a happy Monday and also a strong week. I'll be in throughout the week. Also, remember, you can subscribe to the Trader Talks channel by Schwab Coaching. It's free. And also, you can follow Barbara and myself on X. Feel free to do so. We post educational content there daily. So with that said, this has been the class on trading with technical indicators and with a special focus on earnings, but giving a little bit more time. And I'm trying to kind of give you some examples, close to earnings, post earnings, and even maybe a little bit more timed earnings, and using indicators to try to trade those. With that said, stay tuned for Michael Fairborn coming up next. Take care. Bye-bye.